Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to get into what's going on with AMC stock here today. Down about 1%. And I think we need to talk about AMC more broadly here in this video. So that's what we're going to do as well. Obviously, we're going to go over all the data. We're going to talk about what's happening in the markets today, but I really need to just talk to you guys as well. So hit that like button and subscribe to the channel. Let me know what you guys think about this information down below in the comment section. So first things first, AMC stock down about 1%. The unfortunate part about this is the Russell is up almost 1%. Why is this happening? Everyone wants to know, like, what's going on? Why is this happening? It's very simple. Adam Aron continues to dilute shareholders, either converting shares to get out of debt, right? To get out of a small portion of debt, which in the grand scope of things is really not helping AMC's fundamentals that much. I believe the last conversion was 3.3 million shares to erase like 20 million of debt. When the debt is 10 trillion in the long term, 5 trillion of that comes due in the 2020s. I mean, that just doesn't move the needle enough and degrades the stock too much. That's the problem that we are continuing to see with AMC stock. Yet again, massively underperforming the markets. Now, there's not too much actually going on. There's really no news specifically to get into. Kind of some of the same stuff we've talked about, right? A lot of dilution that's popping up here on the news. We did see some new position taking by some firms, but that's really not outweighing all of the dilution that we are currently experiencing. There's actually not too much that is going on in the broader markets as well. If you take a look here at CNBC, MicroStrategy, home prices, there's just not a lot going on. If you take a look at this, October home prices post biggest gain of 2023 despite higher mortgage rates, says S&P Case-Shiller. Home prices rose 4.8% nationally in October compared with October of 2022, according to S&P CoreLogic Case-Shiller Home Price Index. This, in theory, maybe is not the greatest thing for inflationary pressures, but we will see. That's a jump from the 4% annual increase in September and makes the strongest annual gain seen since seen in 2023. Among the top 20 cities, Detroit reported the largest year-over-year gain in home prices at 8.1% in October. This week, we really don't have much for economic data. We do have some bond auctions. We do have wholesale inventories month over month and initial jobless claims, as well as the good trades balance coming out Thursday. But other than that, we really just don't have much for this week. You do have some Richmond Fed data coming out tomorrow, as well as some Dallas Fed service numbers, but none of this is really hard data expected to move the markets at all. And actually, on the earnings front as well, there is 0 companies with analyst estimates that are reporting earnings this week as well. This is the first time that has happened since 1997. So it looks like it's shaping up to be a pretty slow week, although this is the start of the Santa Claus rally. So normally the Santa Claus rally gives you growth of about 1.4% from now until January 2nd. That's the historical average. Now, as we talked about in the last video, every year since 2002 has been green in this time frame, besides 08, besides 2012 and 2018. If you are green this time around, that is going to mark 5 years in a row of a positive return for the Santa Claus rally. Because you were positive in 2019, 2020, 2021, 2022, and we'll see about 2023. And even 2021 was a huge gain. 2022 was a lot smaller. That was a little bit less than 1%, but still a gain nonetheless. So the historical precedent is you're usually bullish about 80% of the time. So I wouldn't be necessarily betting, for any different outcome right now. And this is an 80% positivity rate from 1950 through 2022. So you definitely want to be a little bit careful if you are negative over the next couple of days. Some of that theta as well really hurt the options over the weekend also. So keep that in mind. Now, AMC stock, let's get into some of the data here, and then let's talk about the stock more broadly. So we do have 9% short interest off your float, $135.13 million worth of short positions in AMC, 1.08 days to cover, 22.15 million shares that are currently sold short, shares out on loan 13.76 million, cost to borrow 1.16%, and 21.04% utilization. You do have about a 50 out of 100 for the short score. And if you take a look at the option activity, you do have one order totaling $10.48 thousand with a positive order value of 0% over there. So yeah, we do have, you know, some not so great option activity today, although it's early in the day. We've only seen one order technically. Just overall looking at AMC, you're down about 1%. Just does not look all too great. If you take a look at the volume here, 74% to the call side, 25.88% to the put side. I mean, I just don't know how much better that could get with, you know, a muted AMC, you know, reaction, right? It's not like nobody's buying AMC. People are buying AMC, but the shorting pressure, the selling pressure is very high in this stock. Now, Stocko tracker data for this week does show you do have about 11,000 calls currently in the money, 62,000 calls out the money for this week, about 15,000 puts in the money, and about 18,000 puts out of the money. So definitely the possibility for some volatility here with the options market. But unless we get company-specific news for AMC, this is probably going to be one of the slowest weeks we have had in a very long time. Now, in terms of AMC, I just want to be brutally honest with everyone. The stock is now up a 0.5% today, approaching about 1%. But until we get either a lot more liquidity coming into our markets, or AMC's CEO, Adam Aron, stops being an asshole and diluting shareholders, don't expect much. Now, when I say don't expect much, that does not mean the stock will not do much. I mean, just don't expect it. Don't expect AMC stock to do well. Can it? Will it? Probably. But you definitely want to keep your expectations very, very low right now. Because, I mean, this dilution is like a cloud of smog constantly being breathed in. I mean, it's like you're trekking a mountain with packs of shingles on your back. If you're roofers, you understand that's only doable for so long, right? No matter if you're the best roofer out there. Try climbing Mount Everest with a damn, you know, one single sheet of shingles on your back. I mean, you're not going to last that long, right? Point is, that's a huge obstacle, and that's a big problem. The latest dilution that we've seen was 3.3 million shares being converted for like 20 million of debt paydown. There is $5 billion worth of debt that comes due in the next couple of years. I just don't see how that makes a lot of sense, diluting shareholders for that little of, you know, debt payoff. Right now, Adam Aron has really an obstacle in front of him. And that is, do you just dilute shareholders at $6 per share? Do you hope the business fundamentals and retail investors drive the stock up so you can actually dilute at, you know, levels that even make sense or move the needle for the company's debt load and fundamentals? I don't know. Do you wait to refinance a lot of this debt and then dilute shareholders? I don't know. But we need some form of absolute confirmation that there will not be dilution for a while. I don't know when or if that will come. That was the case at some points in 2022. Adam Aron said he would not dilute shareholders until the start of 2023. And AMC performed pretty well during that time period. It went up quite a bit. So I say don't have high expectations, but the stock can, do what the stock's going to do, right? The stock can rally. But again, just don't have high expectations. Now, if you are someone that has a big position in AMC like me, you've taken heavy losses, maybe it's time to think about diversifying your portfolio. If you don't want to miss out on some of these spectacular gains that I think are going to be had in 2024 in some of your small mid-cap stocks, interest rate sensitive names, maybe it's time to think about, broadening out your horizons and start investing in some other companies that maybe are not diluting shareholders or, are about to hit profitability. A couple names I can think of off the top of my head that I'm invested in. PayPal is a good one. SoFi is a good one. Fubo is a good one. Even Snapchat is probably going to be a good one in 2024. These are all names that, I personally invest in. There's a bunch of them out there that should do pretty well in 2024, just with the narrative of 6 or 7 rate cuts coming. If the business fundamentals for those companies continue to accelerate, that's going to be even better. So yeah, let me know what you guys think down below in the comments section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.